All right, good people, it's your girl Kim McBride, also known as Get Keys with Kim. Let's talk about mortgage insurance protection for those of you who own a home and want to make sure that when you pass away or you become disabled, that your loved ones aren't left with the burden of paying off your house. Whenever you purchase a home, that is probably one of the single biggest investments that you will ever make in your lifetime. And for that reason, not only do you want to protect it from things that may happen while you live there, you may want to protect your investment so that when you pass away, that whoever you plan to will your house to, and we won't even get into wills because if you don't have one, it can become an issue. But whoever you plan to will your house to does not have to worry about paying off your mortgage. Instead, having that mortgage insurance protection will then pay off the balance of what you owe on that house. I want to make a quick disclaimer here. Private mortgage insurance and mortgage protection insurance are two totally different things. You might have heard of PMI, and PMI is insurance for the lender in case you default. We're not talking about PMI. We're talking about MPI, which is mortgage protection insurance. And very similar to traditional life insurance, like how much it costs is going to depend on a lot of different factors, like how old you are, your health, all different types of statuses related to you. So it's really going to depend. And one thing you want to keep in mind is, do you want to have this as part of like an additional insurance coverage? Right? It can be its own policy, or do you want to just increase the coverage that you have on your life insurance so that whenever that is paid out, your family can then take that money or part of that money and pay off the mortgage? One of the things I really like about this option is that when you actually get to the point where you're slowly paying down the mortgage, you need less to cover, right? You need less insurance. And so over time, the coverage and what you need could become cheaper because you need less. And I also like the fact that there are some insurance companies that instead of paying the mortgage company, which I think you should do, like just let them pay the mortgage off, they can give you what they call a payout, and so allow you to get a lump sum and then you can pay it yourself. It's only supposed to be, though, to pay off the mortgage. This is only supposed to be for that. This is to keep a house within a family or within a trust or within a generation, to keep the legacy going so that you're not losing a house to potentially foreclosure because you cannot afford whatever the mortgage is on that house. And finally, a few things you need to remember is, this may not work for everybody. If you don't want to do the mortgage protection insurance, you can also look into term life insurance or something. Listen, let me just say this now. I am in no way in the insurance field. I'm not telling you what to do. You can look into term life. You can look into whole life. Look into some other type of life insurance. Figure out what works best for you. Or you can even consider something called joint mortgage protection insurance that covers you and a spouse just in case either one of you dies. That's always really good. And then, get with your real estate agent so they can connect you with a real estate attorney. We can connect you with an insurance agent. We can protect these assets because it's all about wealth building and wealth management. Are y'all getting these jewels that I'm dropping? I think in the words of Snoop Dogg, I'm dropping it like it's hot. Y'all just, okay, I can't. I know. Thank me later. Like I said, like, share, subscribe, comment, and then come back for more. Make it a great day on purpose. Be blessed. We'll chat soon. Talk to you later. Bye.